Welcome everyone. Again, we're really excited to be here. Let's dive in. So we'll start with some introductions, just so that we're not a bunch of strangers floating around here. And then we've kind of broken this up into 3 sections, kind of going past, present, and future, talking about, what what the state of financing has looked like in this industry in the past, where things stand today, and kind of where trends are going in the future. Everyone here has a really interesting background and diverse, experience in the industry. So I'm hoping that you're able to walk away with this with a wealth of new information. And like I said, at the end, we will have a Q&A. So that if you have questions for a specific panelist or something about Mainvest or your own business or something like that, we'll make sure to address everything. And again, if we don't have time, we'll just come back. So I am Isabel. I'm the Director of Marketing Communications here at Mainvest. So a little bit of everything, but mostly focusing on external communications, kind of being a voice for the company, working both with small businesses looking to raise capital and investors. Almost, these days working really quite a lot on the investor side, making sure that investors at all experience levels feel comfortable using the platform and have all of their needs met. So let's go clockwise.
Rich.
All right, yeah, forgot how clock worked.
Sorry, I went counterclockwise with my finger. I realized just as I was saying.
And then I've got like our heads over here on the side, and then also the pictures. I'm like, which one are we doing? Yeah. I'm Richard Guerra, Director of Global Reach at Sensi Magazine, and Market Director of our New England market. Soon to be hopefully market director of our New York City market as well. And I've been with Sensi since day one in the cannabis industry for myself out in Denver in 2017. And yeah, that's me.
Awesome. I guess I'm next. Richard, I do know how that clock works. My name is Chris Foltz. I'm Managing Director of Responsible Solutions Limited, a Silicon Valley-based consulting firm that is now moving actually to Las Vegas area to focus on being the global advisory practice that it turned out to be. At one point, I worked as one of Richard's colleagues as Vice President of Global Reach at Sensi Media, where we accomplished a lot of great things together and ventured down a lot of paths with a lot of unique founders and startups. My passion for the cannabis industries is vast, and I'm fortunate enough to advise nearly 24 cannabis companies right now in the cannabis industry.
I'm Lex Corwin. I started and I'm the CEO of Stoneroad. We are a California-based cultivator, manufacturer, brand. We have operations in Oklahoma, and thanks to Rich, Massachusetts in Q1 2022.
Awesome. And rounding out the clock, between 10 and 11, I'm Nick Mathews. I'm the CEO of Mainvest. For everyone here, Mainvest, I'm working with these guys on this webinar. We're a small business investment marketplace, heavily focused on consumer businesses, entrepreneur, owner-operated businesses, and recently have started foray into the cannabis space as regulation has kind of evolved and adopted it in identifying massive challenges and gaps in access to capital that a lot of cannabis entrepreneurs are facing, and being able to be a strong solution for them to go out, engage with their community and network, and raise the capital needed to grow their business in a regulatory compliant way.
Great. Thank you guys so much. So let's get into it. I want to start with the state of the cannabis industry. So this is super vague, but I really want to set the scene for anyone here. I'm sure that we have a ton of participants who know a lot about this space. That's why they're here. But I'm certain that we also have some investors or just people interested who may not know that much. Because as of right now, as of the most recent report I read, it's a $60 billion+ industry in just 18 adult use states. Obviously, cannabis hasn't been legal for all that long. And, it feels like now it's snowballing with legalization efforts in so many different states, and perhaps even at the federal level. So, I mean, on the whole, before we dig into just the investment and the finance piece, I'd love to hear from each of you, maybe one or two of the top trends that you're seeing on the consumer side of the industry, or if you have something really interesting to share on, more of the B2B side. I'd love to kind of just set the scene about the industry in its current state. And I figure we'll just do this one round robin style because we all each other at this point.
Chris looks ready to go. Let's start with Chris.
Yeah, I noticed at MJ Biz this past week, congratulations, everybody had a great week. Drinks in the cannabis beverage space is trending like hot. I mean, you are seeing some of the coolest. I wish before it came into the cannabis arena, some of these awesome drink fusions that are out here right now existed in mainstream America. And I believe why that's happening is that, the beverage world is one of the easiest entrance points into mainstream society. And you're seeing a lot of companies trending in that direction. And you're seeing investors preparing for entering into this space, pretty much the same way that they would with large corporations like Coca-Cola. So beverages are live. For those of you that are in anything that plays with that supply chain, you got an interesting future ahead.
Thanks so much. Yeah, Lex, do you have anything, especially as an operator yourself?
I mean, in California, a lot of traditional operators are just facing the immense kind of regulatory challenges, of basically just staying in business with the most recent price collapse. As a cultivator, it hurts, but then as a brand owner, it's an amazing buying opportunity that we're, getting our inputs for roughly half of what we were getting them last year. But I mean, in cannabis in general, there's just an incredible amount of consolidation going on, and also just general corporatization where, everyone kind of expected this, ultimately this is America, and we knew it was going to go down this way, but at the kind of rapid speed it's happening prior to federal legalization is definitely, of note.
I definitely would echo Chris on the drink tip. I think it's turning. I actually recently did a tour of pretty much the most successful cannabis drink business, and there really is just only so many moving parts to that, and there's not a ton of overhead either. I mean, I do think it is pretty attractive for people or companies to be going that route, and not to mention there's if it's hot out and it's the summer, there's all these different ways you can market it, and it is definitely an ease thing as well. I also think over the years I've seen a lot of celebrities, or a handful of celebrity brands that have come out there, and some of them have fallen flat, and I haven't really heard of a whole lot of them, but they're going to keep coming out swinging, and there's a lot of them coming out in Massachusetts, especially. They're going to be Hubcraft is going to be dropping a whole bunch of them at once, and so it's going to be interesting to see how that starts to take off, and maybe if some of these celebrity brands nationally start to really jump out. Outside of the consumer facing market, I would also say there's always going to be this increasingly this need for a sustainable model to these companies. So in terms of the B2B side of things, I think there are options of sustainability and businesses that are looking to bring technologies forth that way that are probably going to take off very soon as well.
Yeah, absolutely. And something I'll actually add in to that, just hearing from you, Richard, and something that we've talked about, just kind of a meta trend for, you and Chris coming from the Sensi side of things. I think that both, the idea of, celebrities taking things on and just cannabis becoming more mainstream, it's becoming the way at least I see it, especially here in Massachusetts, much less around kind of the stoner culture, even the smoking culture in generally, and very heavily around kind of these lifestyle brands, very high-end edible brands. And I think that's really interesting, and it really kind of, and definitely an interesting way to bring cannabis as the whole into the mainstream, kind of through these more, palatable, to the, more traditional consumer avenues.
Yeah, I was just with a friend of mine today in New York City here. He does art for a number of cannabis brands that are not legal. And, in California and New York, especially, there's a ton of that here. And, it's certain markets, like doesn't matter how many years go by, we're going to see a lot of these, black market products, and just generally certain people buying their cannabis that way through maybe those means, at least for the short term. And so, I feel like there's less of a trend, or there's going to be less of a focus around putting that kind of brand out there. And instead, yes, doing exactly what you're saying, and hitting more of the new consumer, and being more lifestyle focused. And I got to give Lex a shout out. I really wouldn't have probably even gotten all that close with Lex and gotten to know the brand if I hadn't noticed that, there was an emphasis around sex positivity and LGBTQ plus, and that being something that he was happy to hitch his brand's wagon to. And so things like that, it can't be really, can't understate it. That kind of thing is exciting and just the beginning.
I think that's an interesting point, Richard. Since, let's say, the last MJ Biz 2019, not counting the digital one last year, the entire social equity, BIPOC, all of these movements have been created in the cannabis industry. Not that there has not been trending towards this direction prior to that, but all of it's so new, much similar to a lot of mainstream America. But it's very much interesting to see how the cannabis industry has reacted, and true leaders of brands like Lex and some of the other brands that you see around the country that actually practice what they preach. And I think that is something that is literally aligning the cannabis industry with mainstream at a faster rate than many of the other things that have happened through the last decade or so in the cannabis world that's somewhat mainstream adjacent.
Absolutely. I think that's so important too when we think about the legalization process and the previous abolition movement and what that meant for communities around the country. The war on drugs and all of these things. As the industry grows and flourishes, I think that there's a necessary focus on these things as well. We could have an entire webinar on that alone. I think it's an important conversation to have. With that said, Nick, I'd love for you to talk a little bit about kind of bringing us into the finance side of things as we start digging into that in coming slides. I'd love to kind of hear your take on where things have been in the industry, so that we can start talking through some of the specifics about what's changing.
For sure. And I think we definitely want to start with a little bit of a legal preclaimer, like Mainvest, we're a FINRA regulated crowdfunding platform that can facilitate these investment securities. So we are in no way providing, investment advice. Don't take anything we take as direct investment advice here. But in terms of understanding the industry itself, cannabis is a very high capital intensive required industry to get into, especially in different aspects of the vertical integration of the supply chain, depending on how much you want to be doing there. And, directly counter to that, access to traditional capital in the term, bank loans, with a lot of the federal regulation not aligning with these state-by-state regulations. Even state banks have had limitations where, because the federal government has not yet made it legal, there is an inherent risk to those banks for banking cannabis businesses, and beyond that, lending to cannabis businesses. And there's a bunch of exciting legislation on the floor of the House and the Senate, parts of the Safe Banking Act, that are designed to create a federal framework to start to enable more of that. And there are banks that have been able to, risk adjusted, make the decision to be able to service across these different industries and sub-industries. But even with that, I think, when you look at the traditional bank underwriting models for cash flow focused businesses, these are models that have been honed over decades of are we going to invest in restaurants? Are we going to invest in breweries? What are we lending to? In such a nascent space that is having such an explosion right now, I think even with those federal regulations coming, there's still going to be a delay from a lot of the larger institutional partners, just due to their much more tempered stance of risk approach. And that's where where businesses are getting funded right now is through private capital and private equity is the majority of the funding that's going into the cannabis space. And what we are really excited about is what happens when you can open that up and allow retail investors to review different opportunities, do the due diligence, and be able to participate in such an emerging industry. In a way that, like, if you look at the tech boom, in the whole reason these regulations that we operate under were created was you look at the tech boom in the 2000s, 2010s with the Ubers, Airbnbs, these companies that were continuing to like raise private round after private round, increasing their valuations, like delaying their IPO. That all of the growth that happened in that period was limited to the top 7% of accredited investors in the country, and even more so to like the fractional percent that had access to deal flow to that. And so you look at this massive wealth gap from retail investors to accredited investors, and it's because of access. And so opening up that access and doing it with strong guardrails to allow for consumers to have a regulated platform where, the businesses are being vetted, where the businesses are being checked for, like bad act reports, past financial fraud, but more importantly, providing all of the information for you to review and make an investment decision. That's what's really exciting. It's kind of getting from the past to the future and being a bridge to that.
Yeah, thanks. And I think it's, there's definitely, I think, a lot to cover. So let's get into it. Like you said, Nick, in the past, I mean, even still right now, aside from, some of these regulations that are allowing for kind of new forms of capital for these brands, there have only been like really a handful of ways for cannabis businesses to actually get financing. So I'd love to, hear from all of you, but in particular, Lex, I'd love for you to, talk through your story on the kind of the operator side of, what it's taken to date to, fund your business. And then from the rest of the panelists as well, kind of what are some of the main challenges that you see right now that are going to be kind of like most important to overcome?
Thanks. So yeah, honestly, like with every business, cannabis or otherwise, like everyone's first round is friends and family, which is, can also be kind of more difficult because you have these, emotional connections to a lot of the people who are trusting you with their money. So, it puts a lot of pressure on, the company as an early stage company where it's like, you want to be really kind of conservative, with the money so that you don't burn through it too quickly. When I started Stoneroad, I was 23. So I made pretty much every mistake in the book. I raised about $500,000. I had saved personally between me and my business partner at the time about $500,000. So we hit the ground running with about $1 million in the bank. It was all gone within like 8 months with virtually nothing to show for it. Like that was just a factor of me being, young and naive, but also, there's no playbook for cannabis. There hasn't been a, traditional way that, you can look at the playbook and be like, okay, this is how X, Y, and Z company basically sold to, Anheuser-Busch or AbbVie or, any of the bigger companies that are going to be doing a lot of the acquisitions in cannabis in the next few years. So, for me, if Mainvest was a thing back then, it would have been something, pretty attractive because, it's a way for smaller people to basically get access and just learn about your company. And then if it strikes a chord, invest. I will say that the industry is incredibly tumultuous, and any investor in cannabis, whether you're looking to deploy debt or equity, you should have a really realistic time frame of when you think you're going to be getting that money back, because without a doubt, 9 out of 10 times, there's not going to be like a liquidation, event until that company's actually purchased. Because, my company, I've been operating it now for 5 years, and, we do millions of dollars a year in revenue, and we're in 3 states, and it's like, we are very far from profitable, much less returning dividends to investors. Just any investor asks, when are they getting their money back? Like, you got to just laugh with them, because it's just like, it's going to be a minute. It's going to be a minute. And so, yeah, that was kind of my experience starting Stoneroad. But as kind of the industry matures, you are going to have kind of more retail and mainstream investors willing to put in, money, where before, people's number one question was like, am I going to face any type of, risk of jail time, if I'm investing in this plant touching entity, where people now, it's a little bit more of a relaxed environment.
I think you hit on something super unique in there, Lex. I spent a lot of time with Founder Institute, where I run the Southwest for them, and this is Silicon Valley's largest accelerator, the largest in the world for that matter. And so you're dealing with tech companies, what would be the traditional startup in that arena. And oftentimes, what I'm seeing happening in the cannabis industry right now is that the investors are treating some of the brick and mortar cannabis companies like their tech apps. And the challenge with that is, well, they're simply not. Ultimately, they have a different exit type strategy and event. They'll probably ultimately turn profit before, the VC fund would be acquired by a private equity, or they went public for that matter. And I think that opens the door for Mainvest, and that's why I'm here. I love this unique opportunity. What a lot of people don't realize is, the government doesn't necessarily always handle everything in the most expeditious way. So in America, a lot of the taxes from cannabis go to the public education system. So when that doesn't work well, the public schools are, in more trouble than they actually normally are. And so bringing that power back to people who actually live in the town and city where that dispensary is, where that production facility is, and giving them a point of entry to actually invest in that neighborhood business where they can fill the gaps in their own life, that has been something that has been missing in this industry. So I think it's fantastic that Lex, you drew attention to the fact about those exit events. It's not the same path as the tech companies and all that, which the VCs have come into this industry with the quickness. And a lot of people understand the VC's job isn't to make profitability. That'll generally be cleaned up by the private equity firms. And that generally comes at the expense of the operators. And in this industry, there's not that many operators that are prepared for institutional funding. So if they come where they're at right now, work with companies like Mainvest, bootstrap, angel, small dollar their way up, they have a chance to not only be profitable, but change the way this industry works. So I'm in it for that.
Nice. Thanks so much.
Not to
I
mention,
don't even have to say anything else. That was pretty good. I'll step out now.
I think maybe not to mention also holding on to a good chunk of their business. Sounds like a nice thing too. And I was really impressed to see that you've had a few cannabis businesses on the platform that have done a really great job of raising funds, and excited to shout out to Loud Girl out there. She's Carolyn, my friend. She's out there raising. We're Loud Girl goodies. I was going to say cookies. Sorry, I had to catch myself there. And I personally started in just hanging out in Denver with Sensi, doing events. I come from live music and arts events, and so I just was like, oh, I'll go start doing these events. And they brought me on and started to teach me how to, ultimately, move magazine advertising and event sponsorships to cannabis businesses. So before you knew it, I'm hanging out with all kinds of cannabis businesses of any sort, many of which are plant touching and retail in the Colorado market and eventually across the country. So many moments in these conversations where I'm just getting to know someone and, presenting the marketing options to them. I'd be in these conversations about investment. They need this type of money and they're looking for money in this way or that way, maybe. And then I'd meet someone in cannabis that provides loans with really high interest rates. And so, funding in general started to become something over the years that I just found myself kind of in the middle of. I had no real background in determining where that money should be coming from or how best to direct folks. And so it's definitely just been a huge learning process for me. And I'm seeing more and more as I start to get into positions with brands of friends of mine that are looking to expand into other markets or looking to just develop their business in general, that this is really important. And so I'm always excited to see what is coming, what's the new opportunities, and this platform is really awesome because it seems to have been something that's lacking for early stage.
Definitely. I mean, that's why we're here. So we can definitely, we have a slide coming up on, Mainvest in particular, just because this is just definitely a new model for investment. I'd love to spend a little bit of time while it looks like we're doing okay on time. I'd love to hear, so let's say, a business goes out, does Mainvest raise? What are some of the other forms of capital that work pretty well for businesses that are still options right now? Like maybe let's talk a little bit about some of the tailwinds that might already exist in the industry.
So I have historically kind of avoided debt because from my experience, there's so many major headwinds when starting and running a cannabis business, and so many things that you don't expect. As a little aside, last year we had our first and only profitable quarter, Q3 of last year, and we were absolutely cruising, growing at, we grew literally at a 700% rate over the year. And then we had a massive manufacturing issue that was completely out of our control. We basically received packaging that had been tainted. It tainted the cannabis inside. It was nearly $1 million loss, completely throwing off our trajectory. And that's just like one of many things that have happened to me over the years. And if it's happened to me, it's happened to tons of other cannabis operators. So basically trying to operate under the gun, being like, oh, this note is a 3-year or a 5-year, and it's like, I have to return this money. Like, I've always just preferred raising equity. And even though it means that I own slightly less of the company, it keeps a lot of the pressure off that these people that have kind of joined the Stoneroad team and decided to invest, whether it was a family office, a private individual, VC fund, they're really focused on our long-term goals, because they're not in it for a short payoff, which is frankly doesn't happen really in cannabis. You can point to a few exceptions, Kronos buying Laura Jones for $300 million in 2018. That doesn't happen anymore. Do you know what I mean? It's just firms are too focused on diligence to overpay. And of course, you're going to have these big Canadian companies that have their shares listed. So to them, a lot of it's funny money. So it's you're going to see that next wave of kind of transactions that have no basis in reality coming from these Canadian, public companies, because they can just issue more shares. Do you know, man? They can buy you for $100 million, 95% of which might be in their stock. So ultimately for me, realizing kind of where I've gotten in the business and the people that have helped me get there, they have to be firm believers in you and the business, because ultimately it is going to be a long road before, I feel like the vast majority of operators are profitable or, even ready for an acquisition.
Yeah, I think that's an important point, because we've heard, so many horror stories of kind of equity deals gone wrong, or even being predatory. But it's good to hear that when these opportunities arise, they can be so beneficial for an operator, like you said, who might be facing some of these different challenges, and really requires a partner, both in the capital side of things, but also just kind of in the vision. So, I mean, it's good to hear that those are still out there. I think that's where, in particular, tying to revenue instead of just a term loan on the Mainvest side, that's kind of where that comes in as well. Just trying to a lot further align incentives to kind of, add our voice to the mix. I don't know if anyone else has any insights on kind of what the state of cannabis financing looks like, or I guess, good or bad, if there's anything to call out.
Well, I guess that gets back to the sense of trends. And I do agree. I think that with the Canadian listings and with even the SEC, starting to do SPACs for touch the plant cannabis. And that was kind of the tacit approval there. When you have that opportunity for the VC funny money, or for the acquisition engine from these larger companies to have kind of the round, what you do see is these crazy crazy like feature scope, or that's a tech term, valuation scope or valuation creep, and just crazy inflation in these valuations, which is going to create, I think, over the next few years, a little bit of a wild west in terms of how to actually properly price securities on that front. And I think that also like lends to like the, back to Chris's point around, VC companies looking for these super high growth, 100x return companies, and then going to VC because they can't get anything else. Like sometimes it's just not a good fit. And if you're running a basic dispensary or a cultivation business, or have like, some aspects of vertical integration in your business, but at the same time, you're looking at like your 5 years you're talking about, 15% year over year growth, not like 5,000% year over year growth. That's a cash flow business. And cash flow businesses, when they hit a point of profitability, being able to just provide returns as a share of revenue, have a cap to that as opposed to like dilutive capital, I think does make a lot more sense. And going back to the community participation side. So again, without providing investment advice, like really in looking at these different opportunities across the scope, I think it's going to be really important for the average cannabis investor that wants to participate to really understand what the business is trying to do, and with the scope of what they're looking for to do it, how much capital they feel they need to do it, and really learn more about the space itself.
I think a lot of the companies that are out here, especially with Canada at play right now, I think everyone's chasing this kind of valuation, right? Like this is the television show Silicon Valley or something of this nature, where, a little perspective here, you have some of these valuations that are set based on the Canadian market, and some of these companies aren't even at consistent revenue yet and have hundreds of thousands of dollars, of $100 million of market caps and valuations. In the cannabis industry, you have multi-state operators who are now buying large corporations in other states. And you go read on the forums how they haven't paid their vendors, they haven't paid their employees, they haven't done all of this. So as an operator, don't chase the mysterious world of the unknown, because frankly, you're better off looking at testing the waters, and not cannabis investment's not for everyone. It's important for people to understand how angel investors differ from VCs, differ from private equity. But one of the smartest places to start is right here with what Mainvest is doing in these incremental fundings. And what I think is great about that is, they say that if you don't love bananas, you don't invest in them. You see a lot of people that are coming towards the green rush, right? And yes, it is an opportunity for people to make a lot of money. But at the end of the day, whenever there's been a rush towards something, it doesn't pan out that way forever. Sooner or later, the market does correct itself. And it's important as an investor to be the most educated and to invest in the things that you actually have passion in and are willing to stay on top of, and follow the investment through. And to Lex's point, I couldn't agree more. I've never been a big fan of convertible notes, right? Especially in cannabis, people are looking for the quick payoff. And a convertible note over 3 years with the interest rate and large volume of money, there's big money to be made right there. But the safe note, one of my colleagues, Adeo Ressi, bless him, he was one of the originators of the safe note. It's all the things of a convertible note that you like, except that it doesn't set your valuation on that early money. Plus, it converts over to equity, so the investor's into it for the long haul, just like you as the operator. So take time, find investors, find people like Mainvest that care about you as a founder. That's when you found the right investors.
That's well put, Chris. Oh, go ahead, Richard.
Well, I had noticed a question coming from someone anonymous earlier, more or less saying they were a novice investor in cannabis, and we clearly know our stuff, and and they wanted to know how and when and what time frame should they see a positive impact in their investments in cannabis. So in my mind, I'm thinking what they mean is those investments that they've put, those stocks that they've put money into for cannabis companies. At this point, all of which, had a nice big spike back in February, but have been completely down since. And, there's not, and early on, I started seeing these big, Canadian owned businesses that have come down here and bought out a bunch of MSOs and stuff. And I'm like, oh, maybe this is where it's all going. Maybe I'm going to see a lot of cool brands and cool things happening. People I know that I trust having jobs at these companies. Absolutely not. That's not what's happening. So, I'm not personally all that I don't have a whole lot of trust in those current investments that are available in those ways. I think that I really do enjoy these opportunities that are popping up here on Mainvest, and just other ways to become an investor and to start dipping your toe into cannabis other than relying on these, largely extractive and really just horribly profiting cannabis massive organizations. I think we're going to always see a trend that is, how do we kind of, it's not like how do we only support the small little guys, but it's like, how do we also recognize who is just like a massive shark that's really just coming in here and taking advantage of small businesses and investors.
In terms of time frame, I just say don't hold your breath.
Yeah,
I knew it was coming, Lex. I saw the smile on your face. Lex, what I love about Stoneroad and your general take on this is, here you have a leader who's willing to be authentic, right? So many cannabis companies out here want to be disruptive. Let me tell you, America, authenticity is the new disruptive. And the truth of the matter is this: if you want a good indication of when you're going to turn profit, realize most companies in the world don't make profit. Most companies fail, and that's across the board. The best gauge to this is the leaders of the company, and also the formula that they use to come up with their valuation that started in the first place. I was with a company the other day, and they're like Oprah when it comes down to their valuation. Everything raises the valuation. This raises the valuation. That raises the valuation, but nothing real, right? So when that's the case, trust me, although it sounds pretty when you invest, sooner or later, you're going to realize that you're so far away from profit because all of that fluff has to be handled before you.
Right. I think just in a general kind of investing thesis, when you're thinking about the difference between like a passive income debt investment and an equity investment, really it's just a level of risk appetite and that understanding. The long-term upside for an equity investment into a company the goal is for it to be much higher. Like, you're not doing an equity investment for the hopes that in like 7 years, you're getting a 10% annual return on that. Whereas for, like investments in like real estate or, a lot of the revenue generating passive income, like share investments, yeah, like there's a set kind of range. The business is targeting a certain return for investors, but that return isn't going to be like 100% year over year, right? It's going to be somewhere in like the 10 to 50% range year over year, 50 being super aggressive. And when we see, high cash flow focused businesses doing that, it's because, there is additional risk there. But in looking at the way these securities are priced and having the entrepreneurs pricing the securities to allow for the market to go out and evaluate that, it's really an understanding of your risk appetite. And so, to that question of when do you get a payback, it's also really dependent on like the inflection point in which you're investing in that business, at what time in that business's life cycle. And, if the business is generating revenue and they're post revenue and you're doing an investment through a revenue share, then yeah, like you're going to start getting returns on that revenue because that revenue is already generating. If the business is like pre-licensing and is like in the path of getting that original license, and their model is you need to be evaluating, there's going to be a large time frame between that, a lot of roadblocks that can come down the way before you actually start seeing liquidity on that investment.
No doubt. It kind of makes me think back to what I think, Chris, you were alluding to, that in relation to some of the multi-state operators, these larger entities that are retail, maybe vertically integrated and whatnot, which are probably going to be the ones that become the biggest companies in the country. They, I think something we've noticed and something that is still kind of persisting is they have been doing, a lot of those groups have been doing this push to pull in more facilities, pull in more states. Maybe that's for the valuation, I suppose, but it's not exactly, you're not seeing those new states, those new markets, those new shops coming online with like a strong, a lot of strength behind them, maybe in terms of marketing or in terms of management and just personnel. And so a lot of these, what I've been noticing is that a lot of these kind of bigger entities that are choosing to acquire small businesses and expand into other markets, they have a really small team on the corporate side. They don't necessarily have the kind of team that can really handle managing that growth to some extent, specifically managing how those businesses are marketing themselves in these markets, and maybe how the awareness and the trust is actually being built in any of these new markets. So that's something I've noticed as well.
And just piggybacking off of Rich's point, I think there's a big difference for cannabis investors understanding that, the people that put in money at Stoneroad when we just started and it was $1 million valuation, yes, on paper, they have had an incredible return just by the fact that we are still in business. But the difference is that even when we get bought, realistically, no one is going to be coming in and buying us for all cash. It just doesn't really happen. And so it's like, if you're going to be investing in cannabis, like buckle your seatbelt, because it's like, okay, you buy Stoneroad in 2017 and then Stoneroad gets bought by XYZ company in California, and now your stock is in XYZ company, and now that company basically has to just grow like crazy until it's federal legalization, and then that gets bought by a giant multi-state operator, and then now your equity is heavily diluted in another company, where it's like the industry is brand new.
That's
so
like what's gonna happen, isn't it?
I've been
so many brands.
one of the largest California cannabis companies. Me and the founder and CEO have had this kind of rapport for a few months now, where she's a really big fan of the brand. She's probably one of the most powerful women in cannabis, if not the most powerful woman in cannabis in California. And I know that they're raising money for an M&A fund, and so for me it's understanding if I am basically an acquisition target, when they buy me, how many years of my life am I going to have to give this company to basically make the acquisition go through? Will it be 3? Will it be 4? It's really like the book is just being written. There's no good blueprint to actual cash liquidity. We are just building something that we all know is going to just keep growing exponentially, because it has the power to change people's lives.
You bring up a good point. A lot of people don't understand venture capital firms. That's a 10-year commitment on these VCs, right? VC is not an overnight thing. I think there's often a misinterpretation of it. And when I say VC, I'm talking about fund money versus individual money. And what I think is fantastic about it, cannabis moves at, regulatory wise, moves at such a fast pace. But unlike pretty much every other industry, it's still a Main Street business. Regulations happen at the state level, oftentimes at the municipal level. Heck, there are some municipalities in Nevada where the municipality itself won't allow foreign investment in cannabis companies that are in their town, where another one down the road in another town may allow Canadian investors. So with this, it's important to look at how fast changes happen. When you're going to invest in a cannabis company, look at their track record of failures and how they react to it. Everybody wants to celebrate all their victories. They won High Times Cannabis Cup. They were in Sensi magazine. They spoke at MJ Biz. This industry is all about reacting to failures. And those companies, those leaders, those investors that react to failures well are going to be the ones that are still around 10 years from now.
Well put. Yeah, this is super interesting, guys, and I feel like we could go on for hours just about kind of what's going on and basically like how different people at different levels can get involved. I know that we're running a little bit low on time. I don't want to keep any of us for too long, and I'll be around if anyone has any specific questions, although I gotta say I'm learning a lot myself here. I'd love to kind of dig into the basics of how, kind of back to basics on the Mainvest side of things, of like, let's say you are either a non-accredited investor or kind of an almost accredited investor or an accredited investor, of course, and you're saying, okay, all of this sounds super interested. I want to get into the industry. How do I get started? Nick, I'd love for you to kind of just come back to basics, give the rundown of how this works. And I'd love to also just kind of have a more general conversation about like really, or just kind of continuing this conversation about where things are going. Why is cannabis so Main Street? Why is it important to have accessibility in investment to cannabis? I'd love to kind of bring up all of these different points. And in the meantime, if anybody has questions, we might address them in this next section, but just in case, if you want to start tossing them into the Q&A so that we can kind of rapid fire after a couple more notes from the panelists.
For sure. And, I think the future of cannabis investment is here. Is a pretty bold statement. Really, we're excited to be part of a kind of a bridge around cannabis access as the future of cannabis investment and future of cannabis capitalization, and just the growth of the industry evolves. And again, just as like the high level of how Mainvest works, want to be super clear, like we're not going to be talking about any of the individual investments on the platform. We're not going to be qualifying them, but Mainvest, was built, we launched in 2018 after getting regulatory approval. We're a FINRA regulated crowdfunding alternative investment platform. And our bread and butter, our whole mission is around empowering Main Street businesses. And so if you look across the platform, and it's not just cannabis, there's a lot of breweries, bakeries, restaurants, yoga studios, these cornerstone cash flow focused businesses that we looked at the value of community underwriting and like community vetting of the businesses. And when you have people in the community tossing their dollars in, voting with their wallets, the thesis for us was that when you have that market underwriting done by that local community, that's going to lead to a more successful asset class. Because like bank underwriting can do a lot and it's gotten very sophisticated, but it can't touch that one aspect of actual, like, does the market want this? And how do you test that? Are they willing to actually invest in it? And so that's where we saw the regulatory like kind of unlock there to enable for a marketplace for people to be able to participate in these vetted opportunities. And in kind of moving to that, like the secret sauce is creating a security that aligns the incentive of the investors and the businesses, which is where we got to the revenue sharing note. And so the revenue sharing note, the way these investments work on the platform is when you invest in a business, you're basically getting a percentage of their future revenues generated for a set period of time up until a total amount of your principal plus an additional return is made. And if it's not made by the maturity date, the business owes the rest to the investors as a balloon payment. That's how pretty much 99% of the offerings are structured. We are starting to look into some equity offerings, more specifically in the cannabis space and some real estate stuff. But the primary focus here are these revenue sharing notes done through regulation crowdfunding. The offering memorandums and diligence are filed with the FINRA, with the SEC's EDGAR database. Which is a bit of an antiquated database and UI to go through, but we do our best to make it easy to navigate. And when we looked at that revenue sharing note that aligns that, where if a business accelerates their revenue faster than anticipated, investors get a higher return. If a business is slower to do so, that return can be lower, but there's still liquidity. And to that point, a business that is having an event of, say, $1 million of inventory getting spoiled, drastically affecting a quarter of their revenues, then rather than a term loan having that monthly repayment, regardless of the performance of the business, they have that flexibility to figure stuff out. I almost said other words, figure stuff out and kind of navigate through that process. And when we look at cannabis, I think what's really exciting to us is on these smaller scale access, like dispensaries that are looking for capital that are just not a super high growth operation in the sense of 100xing, 500xing for a VC return. I spent 7 years before founding Mainvest at Uber from 2011 to 2018 when I left to start this. Like I kind of lived through that entire life cycle of a company continuing to go private valuation, and creating this massive balloon, taking a bunch of private capital in from accredited investors, and then going public and having a little bit of a boom bust over that cycle. For these smaller businesses, the revenue sharing note aligns really well with the cash flow focus, growing that cash flow, sharing that with the community. And we do believe that there are going to be a lot of high risk, medium risk, and potentially low risk compelling opportunities in the space for retail investors to be able to evaluate. And our job is to make sure that they have access to the proper information, diligence, and the regulatory backing to feel safe in vetting and making those opportunities.
I wish I could just slow clap for you if it didn't waste so much time, Nick. What I love about everything that you said right there, just like I said earlier, it's about finding the investors that focus on founders. So many times you see people that come up with unique investment models, spent their entire life working in banking. Well, let's be clear, banks have to make their money as well, right? So it's not like they're necessarily focused on the founder side of things. Nick's career, you came up, working for high growth companies like Uber, a lot of interesting things prior. You've seen what it's like inside, and you've seen how, some companies are just overcapitalized, in between all of their equity revaluations. Overcapitalization is one of the biggest problems in the cannabis industry, and it's caused some laziness amongst some founders. And what people need to realize is that you may celebrate that day that you've just got this massive influx of investor dollars, but investor dollars is another word set up for investor debt. You see, at the end of the day, you still owe them something. You're still further away from your own personal profitability. And if you think that the operators are the ones that get paid first, you're surely mistaken. So what I really love about Mainvest's approach to Main Street is that it's such a contrast to the traditional route. There are plenty of people out there that are doing crowdfunding and everything, but this was built like as if you were inside as a founder with all the stresses and just checking off on the list the things as a founder that you wish were done differently. From an investor side of things, let me tell you, my business partner, Russell, he's one of the main diligence people at Kuratsu Forum. That's the largest angel forum in Silicon Valley, billions of dollars of investment. So many people do not actually do diligence. Now, you may feel as an operator that, you got away with something. They didn't look too deep on this. Trust me, sooner or later, that's going to bite you in the butt. Just because you didn't remediate the thing that you were not diligent about doesn't mean it's not going to rear its ugly head. So as a company going to Mainvest, I can tell you, if you want to see a contrast to the other side of funding, tonight at 6 p.m. Pacific time, I have an event with a couple Silicon Valley and VC fund people that come from tech. You can read about it at responsible.com, my website. But you'll notice the contrast and difference. And as a cannabis brand, you make the decision yourself. And I can absolutely assure you that you're most likely going to be signed up with Mainvest by the end of the week.
That's quite the testimonial. No slow clap needed. Thank you, though. It looks like Lee's typing this, but I was also going to answer it live. I think phrasing the question, what is safe investing, is almost like a misnomer in itself. I've always made jokes about like the safe being ironic in name, just because it is actually a reasonably risky equity investment vehicle. But for context, a safe is what's called a simple agreement for future equity. And so it's really become the standard for early stage startups running their seed round or pre-seed and angel round. I can speak from experience. Mainvest, we raised our first friends and family round as a safe that we had basically with a set valuation cap. And those investors are basically entitled to, when we had about a year later, our seed round, and we had a priced round, which means, we had two fantastic venture capital firms that I will not speak poorly about here because they've been incredibly supportive of a brick and mortar investment platform through a pandemic and through like a lot of different challenges around growth in the middle of that. But the pricing of that security is done by those institutions. And so when they set that price, there's the price that they're buying in at, and then those safe investors have their notes convert to actual equity at whatever the set predetermined price that they had. And if the price that the VCs get is higher, they get it at a discount, basically. Lee, I don't know if you have anything to add. Safes can be complicated.
They can be. There's a lot of interesting, bells and whistles that can be done, discount rates, valuation caps. The key to this is that when you have that first money in, the money that's supposed to get you going and doing all this, it's not necessarily setting that valuation, because oftentimes it's hard to raise money. We all know this, right? It's hard to even get donations for charitable things nowadays. But at the very beginning, imagine if that uncle that you had that just happened to have $5,000 burning in the bank account that you need is willing to give it to you, but at 50% of the equity of the company. You've just set your valuation. Your company's worth 10 grand. Okay. Now imagine trying to chase down an actual valuation in the future. The SAFE prevents this from happening because those first investors don't set the valuation. It's the big investor that does, the one that needs to have that position. But the beauty behind, with Mainvest, that's just slightly different than SAFE is, SAFE is a good instrument as a company when you're dealing with going after big dollars, and that's your end play. If you're new to the investment world, both as an investor and as a company, you don't want to get yourself into a complicated situation until you first determine one thing. Are you a brand that should be seeking big investment dollars? And what I like about Mainvest and platforms and crowdfunding in general is a lot of these cannabis companies should be bootstrapping. If you guys don't know what bootstrapping is, it's more or less having your customers pay for your expansion by acquiring more customers. If you're going to spend 1,000 hours, are you better served spending 1,000 hours finding a investor, pitching investor after investor, or are you better spending 1,000 hours, maybe 980 hours, doing sales and gaining customers in 20 hours managing your account at Mainvest or with people that are doing crowdfunding like this? I promise you almost every single time in the cannabis world, it's customer base. That's going to grow your market share at the same time.
And just piggybacking on what Chris said, like that's exactly it. Like when the money's spent and the investors look to see what you've done, like they're going to want to see something concrete. They're going to want to see a sales increase, where it's like companies in California that become so reliant on investor dough just to basically patch the holes in the ship to keep floating. Ultimately, like those companies, no matter how much money they get, they're not actually built to be self-sufficient. Like Stoneroad, like we have less than 10 employees. Everyone wears multiple hats, and we are really close to that break-even spot where it's like we're going to be raising our biggest round to date in January, but we're going to be doing it off the back of being profitable, which is something that 98% of cannabis companies can't say. So it's like having something besides, a slide that says the US cannabis industry is going to be a $60 billion market in 2026. People are getting more savvy, people are getting more sophisticated, and just throwing your hat into the cannabis industry is not enough to, justify the valuations that we're seeing. And that's why you see some of the biggest brands and companies in California doing rounds that are, almost 50% down from, where they raised before. I mean, Cannacraft, Dosis, you look at huge companies that have real assets, and it's like the companies couldn't live up to their own expectations, and now they have to dilute all their existing investors. And it's like, rather than doing that, just trying to grow organically, which is something completely new to the cannabis industry, is always
recording in progress.
The way to go.
Sorry about that. Hit the wrong thing.
To Lex's point, let me just touch on one thing. What I found quite interesting in that statement is, I think a lot of people don't understand what Wall Street actually invests in. When I say Wall Street, I mean institutional investors. Let me be clear. Institutional investment is not really in the cannabis industry yet in America. That's where you have your big banks. That's where you have that Wall Street funding. And with that comes things like requirements for key asset insurance, which right away, half the cannabis industry execs, me included, we're going to be struggling a bit on these type of things. So there's going to be the great reckoning between now and 2025, right? Where the brands that are taking the time today to prepare for the requirements of institutional funding, to, even if you never anticipate going public, look into the requirements of being a C-level executive of a public company and making sure that you meet that. Because in Wall Street, they're not necessarily looking at how pretty your branding is, how cool your logo is, or anything. They look at this as, well, what is your logistics and supply chain? How is it that in Wall Street I can give $1 million on Monday, get $1.2 million on Tuesday, because I'm funding basically your logistics process? When I sat down with somebody from Wall Street and they asked me to review a deck. This is a hundreds of $1 million IPO in Canada. So I'm sitting here putting all these notes, being the marketer that I am. I love this about the brand. This is where I'm going to be victorious and all this. And he looks at me and he said, Chris, although you're probably right about most of those things, None of it matters to us. You see, what I'm looking for is the logistics, the supply chain, the back channels, the assets that's Lex brought up to it. You know, that's the thing you want to look at. If you have a tech app that's doing something ancillary, if you have something that is what you would see in Silicon Valley in the cannabis space, come on over to Founder Institute. We'll help you with that stuff and work with Mainvest on it. But if you're one of these brick and mortar businesses that change the fabric of America every single day in cannabis, you want to make sure that you're taking the time to do your investment rounds correctly. And for the small investor, you certainly want the brands that are also taking the time to make sure they're set up correctly. You'll find it all here.
Super well said. Thank you.
Great advice. Yeah.
Awesome. So it looks like since we're over 7, Eventbrite is giving us some like technical issues. So I think what we'll have to do is wrap the webinar portion of this. This has been really great. I think what we can do too, if everyone wants to send me, if you have extra questions or want the recording of this or anything like that, send through, I'll put my email right in here. If I can see my chat, here we go. And send them all to me. What I'll do is compile them. If you follow all of us on social media, if you sign up for our emails, I'll make sure to just have really good communication with everybody who's been here today to make sure that all of your questions get answered. And hopefully we can find ourselves back here. This was a really dense, really informative conversation. I found that I learned a lot of things. And, obviously I'm a big fan of Mainvest and what we're doing in the cannabis space and for Main Street businesses, but it's just so important to hear from the perspectives of others, kind of just in the industry as a whole, who work with businesses, who work with investors. And so this has been so valuable. So again, for everyone who's watching, email me with any questions, or if you need a connection with any of the panelists and with their emails. But yeah, other than that, I'd love for everyone to kind of wrap up. And, if there's anything else that you want to add, let's go for it. I'm worried that some of our participants got kicked out because of Eventbrite, which I'm going to have to take up with them. It's very rude.
Well, sure. And finally, just Richard, Chris, and Lex, thank you guys so much for just such a substantive conversation. Like, I learned an immense amount through this as well. And we just really appreciate you taking the time to talk to us and talk to all these people that are interested in the space. So thank you.
Thanks for having us.
Yeah,
Thank you very much. And thank you for what you're doing for this industry and many others to come. So look forward for more and happy to join in the future. Like I said in the chat, I am doing an event tonight about startup funding and some of the myths, which we talked about today. And great to know how Mainvest is some of the solutions for those myths. So please feel free to click the link in the chat. Join tonight, free event through Founder Institute Southwest. Look forward to talking to you all again soon.
Thanks. If anyone has specific questions, feel free to reach out to me. I think Isabel will put our emails somewhere. And if anyone has any questions, I'm happy to provide any color I can.
Yeah, we're on this train that is cannabis. We cannot get off. At least speaking for myself, I pretty much live and breathe it. Wake up in the morning, nerd out.
I just have all my life savings locked up in it, so I'm on a train I can't get off.
Yeah. Okay.
Awesome. Thank you guys again. I'm sorry to even cut off this conversation. I feel like we could honestly have this conversation for hours and I would be more than happy to. So keep an eye out. Again, please don't hesitate to ask any questions and hopefully you'll hear from us again soon. Thank you guys.
Take care, everyone.